All right, traders. My name is Regal. Welcome back to another video. So in this video, I will be explaining my trade recap, and I will be showing you some things that you need to know also in the forex chart. So please stay tuned and watch this video from the end, from the beginning to the end. You will learn something most definitely, right? So let's proceed. As at Friday, 13th of June, 2025, right? I took GBP US dollar, and then as you can see, it's still there, and I had a loss, right? I had a loss of 15 pips stop loss it. So what happened? Why did I have that loss? It's not as if I don't know what I took or I don't know the trade I take, right? And secondly, uh although I recovered this loss back through gold, I took gold and I made a lot of profit. I mean, I made profit times 10 of what I was supposed to make on this. And if not even times, if not 1000% of this GBP US dollar, right? So let me explain how this happened. So right, this back, right, like Wednesday, right, I was following this trade. So I took a trade right here. And how did I take this trade, right? It is not something let me just show you how I took this trade. It is something I've been using so far, right? So far and so good. So this is a sweep, and this sweep has break of structure. Then this, this inducement has a break of structure. Then the sweep has a valid break of structure right here. So this is a valid break of structure. So I took my trade right here, and then you can see as it delivered. So also I was following this trade, right? And we have this as inducement, because it has a break of structure, right? And market took it out, but market gave double bottom, which is also an inducement, liquidity right on the chart. So our market gave a valid break of structure, transferring the break of structure into this level. This is the break of structure right here. So, right, transfer it into the level. So it means this point should be our protected level. But remember what I explained to you guys in the Telegram channel, right? That once you see a protected load that has a liquidity, right? Just know the market has to sweep that liquidity out first, then before it move in your direction. So same thing what happened right here is what I did, and I took this trade also, and I shared it to the Telegram, and also I did a video about it, and I posted it on the YouTube channel. So you can just go to the short on the YouTube channel and find that video. So um I already mark out this point as a protected low, right? I mark out this point as my protected low, right? But when market got into, right, market sweep it below, I was expecting it to sweep it below into this fair value gap. So as soon as market sweep it below into the fair value gap, then there's a candlestick that I called, what is it called? I called IFC, not I called SMC, ICT itself called that candlestick, IFC candle, right? This is it, IFC candle, IFC candle. So it means institution funded candlestick. So now this institution funded candlestick, if I will be taking a trade from this particular entry, right, from this particular 15-minute time frame, actually I do not see institutional funded candlestick right here. So I'll have to switch to lower time frame. But on the other hand, if I do not see institutional funded candlestick, I want to see a change of character based on this movement, right? I want to see a change of character on um this movement, because this is a favorable gap it's tap into, right? And I don't want to minimize my risk, because if I'm making entry from this favorable gap, I will set my stop loss right there. But if I see a change of character on 1 minute time frame, because this is 5 minutes time frame, so I have to go to 1 minute time frame. If I see a change of character on that particular zone, therefore I would take entry and my stop loss will just be below right there, and it will be minimal. Do you understand? So I don't want to waste much of our time, because I explained that already in the video, and then I don't think I need to explain it one more time. So I was following the chart, and then we come across this level, right? We come across this level that it is also inducement, because the structure which was transferred to this point right here, and then we have a valid break of structure right here. So this should be also what a protected low. Do you understand? So what did I do? I didn't just take a trade blindly, because if I would take a trade on this 15-minute time frame, I would want to, go to, I want to buy my trade from this fair value gap right here and set my stop loss below right here, right? And still market taking out. So what did I do? I switched to 3 minutes time frame. Then I saw a change of character actually. So when I saw the change of character, not change of character, I saw a market structure shift. You understand? So this is the market structure shift. I'm now on 3 minutes time frame. So this is the market structure shift, right? I saw market move this way, right? Market created a valid, a protected high right here, right? And then we have this valid break of structure. A market created this engagement, right? So it means what? It means whenever market wants to come, right? Setting from this fair value gap right here is still very much okay. There's a fair value gap right here, and set your stop loss just above this point right here, right? So it means what? It means to be setting like this, from the fair value gap, sorry, from the fair value gap right here, right? This is where you'll be selling from, and then you'll be getting your take profit right here and the stop loss right above this high. So this is just a 6 pips to target 20 pips. It makes sense, isn't it? So now, but I didn't take this trade because I am focusing on buy. So that's one thing about me. When market is on my pivotal point or point of interest, I will change my mindset away from the previous mindset that market is moving. Even if I see my setup on it, I would not like to take it because it could be trapped. You understand? So, and this is part of what I was saying. So, because we have another market structure shift, sorry, we have another inducement taking right here. So, this point happens to be another protected high. You understand? Because this is inducement, it breaks structure, and the market take out that inducement, then give a valid break of structure right here. So imagine again, if I sell from here, I'll be what? Trapped. So that is why I don't like to take my entry model inside an higher time frame point of interest. Even if I see it, I will not take it. You understand? So just have to be careful, right? You just have to be careful. So when I see that, and then I see market give this level, right? Valid break of structure, then this point should be a protected eye. And remember, a protected eye, once it is taken, it turns to market structure shift. Is that not it? So then I didn't take this trade because I already see a market structure shift, and I already see a change of character. This is a change of character right here. I've told you the difference between change of character and market structure shift. So if you don't know what a market structure and change of character is, go down to my video, you will see where I discuss. The first video I ever posted on YouTube is the difference between market structure shift and change of character. So when I see this change of character, I said this market structure shift, then obviously I should be buying from this other block, right? This other block right here. Because this other block, right? If you're buying from here, this other block, right? Let's use, because I used my Fibonacci and it was around that Vegas level, right? So this is my Fibonacci, right? And it was where? Around Vegas level. So it was the other block that around Vegas level like this. So I use this other block at this Vegas level, and then my stop loss is where is here. So look at it. Is there any mistake right here? I was coming from higher time frame, right? The higher time frame, 15 minutes time frame, which was showing me a protected low, right? And then I see a change of character on the 3 minutes time frame. Then, and of course, while market is coming back to my entry, market was creating inducement. This is inducement, right? Market was creating a series of inducement right here. So market was creating, this is series of inducement, right? The market is creating inducement, right? And then it ties into my point of interest. After I take out this inducement, was not supposed to buy, then I was stopped out. Can you see that I was stopped out? So I accepted because it is not my fault anymore. It is the market's fault. So you take some blames that are not yours. You understand? Once you are not driven by emotions and sentiment in the chart, believe me, if you see your setup and take it and you had a loss, you will not be bothered. You understand? it will not really pain you. You will not be so bad. You understand? You will know that it is market that did that. Imagine this is my setup, and I will show you this same setup that I took on gold, of course. And of course, it was the same setup I took right right here, and it delivered. So you should already know I took the same setup right here. I took the same setup right here, and every of my charts is the same, setup that I have been taking so far, right? So it happens. So whenever you add a lot, does not mean that your strategy is what is wrong, right? I've told you there is no 100% strategy. You can only have 80% win rate, 90% win rate, 95%, but 100%. No, you are not God. Of course, you are human. So in as much as human being make mistakes, so expect that you too can make mistakes. So also for it too, you can do mistakes. So, and of course, not all the time you will be winning. You understand? So this is how I took that loss. If not, see how market was printed. If not, stop them to, you understand? It was so annoying. But when God gave me my profit back, I was happy. So how did God give me the profit back? So this is it. Of course, still here on the chart. So this is, and I'm going to do the breakdown on gold, right? It was on Friday, and I know most of the time Friday's movement is always with intention. So as at the because I don't remember, I told you once it is 4 o'clock, you will not see me take a trade again. I'd rather do what? Go play games, do video games, enjoy, go out or talk or have a fun for myself. I'm also doing myself. So have a fun for myself and do any other things. You understand? So once it was when it was already in the evening, I think it was 3 o'clock, the news was about to come out. Yesterday, the news was about to come out. So I was only expecting market, around that 3 o'clock. I was expecting the market to just clear out this low for me. Just clear out this low for me, right? But also, market did not do that. Market created a break of structure right here. So the low that created this break of structure is not this low. Never. It's not this low. It is this low, right? Because this one high, the low of that high, that's it. This is it right here. So, and this one low, this is it, and this one high, this is it. So obviously, this low was now taken away. So since this low was taken away on the 15 minutes time frame, automatically this level is a protected low. Do you understand? So as at yesterday, I sent it to the Telegram channel that if you want to sell, because this point is also a pivot, this area where market rejected is a pivotal area, right? Where they should be expecting a sell, but you need confirmation. You understand? So since I did not see a confirmation, right? I also on my Telegram channel I posted it that make sure you see a confirmation before you sell. So since I did not see a confirmation, then I did not take any sell on this chart. So where's the confirmation, right? Look at it very well. It's very, very clear here. So I was, this is the low. I was waiting for market to just break below, right? And then we have a break of structure right here. But after this break of structure, it means this low right here created this high, right? Then this low, right, created this high. So we have another break of structure. And meanwhile, this also is a valid what? Valid, a protected low. Why is it a protected low? Remember I told you that a protected low has 3 criteria. Either it takes engagement or mitigate other blocks, or it rejects that global statement. Now you see that it came back to mitigate this other block, right? Right here. Came back to mitigate it. There's not any other flow. It is only this other block that hasn't been mitigated. And also, let's see, did it tap into regular stable? And no, it didn't. So it's obviously that it only mitigated this other block and makes it what? Makes it a protected low. Do you understand? So now, since market has broken structure, right, we should be expecting to buy from this. There's a fair value gap right here. You should be expecting to buy from this fair value gap. But remember that this is 3 minutes time frame. If you want to buy from this fair value gap, you have to go to a lower time frame of that 3 minutes time frame. There is no more lower time frame. You cannot use 1 minute time frame, right? This is the fair value gap. So if you want to buy, you have to go to either seconds, 50 seconds, but there is no way we'll use 50 seconds, right? So it's just better for you to see what market wants to do. So when market did not come back, market did not break this low again, right, as change of character. If market has broken this low as change of character, therefore I will be selling. The market did not break this low as change of character, rather it spiked up and what gave another impulsive move, which means what we have inducement taken out right here. Market won't come back to take out that inducement. Then this happens to be another valid break of structure right here. So let me just mark this point as a valid break of structure. This is 3-minute time frame, right? And it occurred on back to the 15-minute time frame. It showed on the 15-minute time frame also. Therefore, when I saw that move, right, and market created additional order block right here, right? So, and before it creates that additional order block, it creates an engagement right here also. This is also an engagement, right? Because it was on Friday, so all this movement is seen on lower time frame because that is the last day of the week. So since it is the last day of the week, it is most likely should use the lower time frame, right? For much entries, for much trade. So this is the engagement that was seen, right? This is the engagement that was seen. So as soon as market came back, market did not break it. So it means this place buying from there might still be risky to target this point, right? Might still be risky. I didn't say it is risky. I said might, right? Don't get me wrong. So it means buying from there might still be risky. But if you follow the lower time frame, let's go back to the 3-minute time frame, you will see it very well, right? Why you should buy and why you should not buy this trade. So now let's look at this trade. Let's look at the lower time frame very well. So how did I now take this trade? This is how I took the trade now. I took two trades. I stopped the chart. I did start it very well on the chart. So now following this 3-minute time frame, this is inducement taken out, right? So this happens to be a protected low, right? So since this happens to be a protected low, market must not break this low, even if it change to market structure shift, right? And then we should mark out this order block, right, as the last order block on this 3-minute time frame. But remember, I said there is no chance for us to see a confirmation because this is 3-minute time frame. 1 minute time frame and 3-minute time frame, their movement is always or almost the same, right? I mean, the structure is almost the same because just 2 minutes, just 2 candlesticks, 3 candlesticks of 1 minute will form just 1 candlestick on 3 minutes. So it's just useless if I'm focusing on 1 minute. So I would rather focus on 3 minutes time frame. What did I do? I focus on 3 minutes time frame. So when I see that market strip out this low, then it came back to change to some people will call it change of character, but I do not call it change of character. Rather, I'll just call it, I'll just say it takes out engagement, right? So now it takes out engagement right here. Some people call it change of character, right? So since it takes out engagement, this is, for me, this is a double bottom, right? The market will still come back to come and clear out. So I have to be patient very well. Now, this is where I now take a risky trade, right? Now, when I see that market was aggressively, selling, right? And then market came back into this level, right? This is a favorable gap that also I should be watching out for because market super this engagement then change character for some people, but me until market give a proper change of character, break of structure, it would break it below, then I'll see if it will change of character. But market then came back. So market came back. So this point should be a protected eye. This point should be a protected eye. This point should be a protected eye. Means sellers that are selling should sell from this rejection block and target this low as their take profit, right? And then I didn't do anything because I know it is trapped for both buyers and sellers. So it's just only those that are smart, right, that will make money on this chart. So I would say I'm part of those that are smart, right? That is today. So it then gave me this movement, then it sweep out this engagement, right? It sweep out this engagement. So what I'm looking for is not a prediction, but my entry point or entry model. That's what I'm looking for. Remember that this is still a protected low on this 3-minute time frame. So I just want to make entry. That is just it. So when I see market reacted from this rejection block, right? From this fair value gap, rejection is given from this fair value gap. Therefore, I stomp in after this candlestick was created, after this ongoing candlestick was created. So I just stomp in my trade. So I entered from right here and set my stop loss just below right here because I know it's still risky, but I just have to take that trade. So my stop loss was 40 pips actually. Really 40 pips. Okay, it was the second trade that was 40 pips. So my stop loss was just below right here. I entered from this candlestick, from this other block right here. After the ongoing candlestick, so I entered from there and my stop loss was just right here. So and I targeted this high. So I don't want to be greedy, but I had to take profit. So I targeted this high. So upon market, now one of the reasons why I entered with this engulfing candlestick, right? This is a bullish engulfing candlestick. One of the reasons why I entered with that engulfing candlestick is just because there is liquidity. These are pools of liquidity. So this pool of liquidities should not be left alone without market taking it out. Do you understand? So market must take out this pool of liquidity away. These are pools of liquidity. I mean, if I'm talking about liquidity, most of liquidity, these are plenty liquidities, like 20 stop loss that are being placed. Right? Many traders will sell from here. So and this point now is now a choppy movement, right? So it means what? It means traders will be placing their stop loss right here, and they are inducing. I mean, their liquidity right inside this block. So it obviously means that this liquidity will attract this week also and turn this week, this rejection block, to liquidity also. And meanwhile, if it's going to happen like that, look at from this point. So I'm seeing where market is coming from. Look at all these points. Is what liquidity. Now, if market should break this trend line, right, above, it means what? It means market should be buying towards this upside, right? Towards this upside. Because even at this upside, we have another double bottom right here on this upside right here. So I'll just be targeting this. I'll just be targeting this big, this up right here. That's what I'll be targeting. And that was why I took this trade with just little movement. So I took this trade as first entry. Then I took another trade using the IFC candlestick. Then this is how I took that trade with the IFC candlestick. So I identified my IFC candlestick as this. This is an IFC candlestick. This is my IFC candlestick called institution funded candlestick. This is the candlestick that bankers, edge traders, these are the candlestick that they inject more price to deceive many traders. They might inject like $2 million inside this candlestick, and then they see that okay, about $1 billion of traders are ready to keep on selling from here. Then they will take out. So it means they gave you $2 million to collect about 1 billion. That's what institution funded candlestick is. So it is they invest, they funded candlestick for you to know that okay, market is selling massively. So let us keep on selling. And so when I see that this institution funded candlestick is broken above, right? When I see that it is broken above, right, then I took another trade setup, right? So this is it. So it was broken above, not by this candlestick. It was transferred to this candlestick right here. It was transferred to this candlestick right here. So let me put it like this. It was transferred to this candlestick. So this is the institutional funded candlestick that was broken. And on the other hand, remember what I call the change of character. So the type of change of character I use. Remember I told you I don't use this type of change of character. I don't use this liquidity, I do this with or inducement. I use this type of inducement and change of character. So we have a break of structure. The market came back to break that high on this same pivotal point. So it gave me another reason to hold my trade and make another entry. And that was how I took the second entry right here. So I took the second entry using this other block, right? I took it from this other block right here, and I said my stop was just below right here. So this is 30 pips. So it was actually 40 pips. So I don't know why. So it was 40 pips. It was around, I think around there. But it was 40 pips. I know I was just risking 5,000. So just to target this same ad. So you can see the risk to reward ratio is 5 times, and the first one is what 13 times, the second one is 5 times. So this is very, very so when I would take my first trade right here that was risky, um, I wasn't risking up to that 5,000. So but the second trade that I took, then I risked up to 5,000. So in sum of every trade that I want to risk, that I want to risk just $7,000 in this particular trade. And that was how I took this trade. Do you understand? That was how I took this trade. So if if I was greedy and I want to use my trade, I want market trade. And I can never be greedy because this is just a 3 minute time frame. So the movement should just occur within that day. You understand? It is not from higher time frame like 15 minutes time frame. So all the movement should just occur. And that was how I took this trade setup, and it was one. So I recovered um, my loss of 15 pips, right? And this is it. Let's see, 15 pips stop loss, right? It means if I was risking $5,000 right here, right? If I was risking $5,000 right here, let's do the math really quick. So if I was risking $5,000 right here, so the first trade should give me sorry, the first trade should give me uh, 13 times, 2, right? Should give me 26, right? 26,000. That means if I was risking $5,000 on GBP and had a loss of $5,000, right? I had GBP, let's say GBP, I had $5,000 loss, right? So this first trade gave me, right, plus 26K, right? 26K. The second one, this one gave me 25K. You understand? So it means what? It means I've recovered this my 5,000 loss, right? I've recovered it back with just these two trades. So is that not more than 10 times of my account? That is more than 10 times of my account. You understand? So this is approximately 550K, right? This is approximately 51,000, right? This is 51,000, and then I lost just 5K, right? So it means I still make profit of what? 46K. You understand? So very, very straightforward and very, very simple. Just if you know your risk appetite and if you know what you're doing. This game is just, I mean, this business is just uh, uh, what you see and what works for you, not what you are thinking of. You understand? It will never work with what you are thinking of, right? It will never work with that. It only works with what works for me, and if I can sit on the chart, then let me execute it without without being scared of losing. You understand? What works for me, this is it. What works for me, this is it. So I saw it, I was not scared, I took it because I accept that this is a risky business and I can lose my money, right, if I take this trade. Of course, I should have that mindset that I'm ready to lose. So if I take this trade, if I had a loss, it's part of the game. That yes, okay, I had this game. What happened? Why did I lose? So on GU, I cannot figure out what happened. I try to figure it out. So perhaps maybe anyone can figure it. You can just let me know in the chat, and then maybe I would learn from that. So we keep on learning. So I really cannot figure out what happened, and then perhaps uh, market want to react, but yet market should still give me my profit, right? So if I'll be targeting, I should be targeting to this other block, or in fact to this um, drawn liquidity. This is drawn liquidity. This drawn liquidity, right? Then I can just break even to this other flow because I already see this is also a change of character, and market should sell from this other flow. This other flow, market should sell from there. But I don't know what happened. That's forex for you. You understand? So don't think so much about your loss. Just find what happened and why you had that loss. You understand? On your chart. And then on Nasdaq, right? I had a lot of beautiful sectors on Nasdaq, and Nasdaq actually did that. And I think I'll be trading Nasdaq more next week. So I'll be sending my analysis. I'll be sending my charts. I'll be sending my setups inside my Telegram channel. So just click the link right? And join my Telegram channel. If you are there already, just stay tuned, pin the chat and hit the chat. So I'll be dropping a lot of setups that I am seeing. So it's not a guesswork, right? It is a work that you already see to take or to do. So it is not, I don't know, no, Forex is not like that, right? You only take your trade setup. So you notice all my trade setups are what I do. So this is also a protected eye. Let's say from 45 minutes time frame, a protected low. So let's say from 45 minutes time frame, right? So it takes out engagement. This engagement takes out engagement and cause a value break of future. Then we should be said I should be buying from this other block, and that was what I did from this other block. Then I did not target this OI. Why don't I target this OI? It is still part of the trade. What part of my setup? It's because I see another engagement was taken out right here, and then we have a value break of future. So whatever I want to be targeting, I just target it within 50% of my trade. And then if I will sell again, I should sell from, you want me to get another block, right? And in fact, let me see, did we get a regular stable? Right here, yeah. I didn't even use regular stable, but right, we get to regular stable and there's other block right there. So I just switch to my lower time frame and take that trade setup, and then boom. Then why did I say my take profit right here? Very straightforward. You will see the market takes out the engagement, market takes out this engagement, and then this happens to be another protected low on the lower time frame, not so this happens to be. I just targeted the what protected low, and what happened? Market pattern, market begins to reverse. So there's no problem in this strategy actually. So you just have to work, have to take quality trades. So meanwhile, make sure you focus on the higher time frame. Focusing on the lower time frame will give you less win rate and will in fact make you more scared to take trades. But when you focus on the higher time frame, you already know that this higher time frame, it takes a lot of candlesticks on the lower time frame, right? So you'll be good, right? So this is my trade setup, and that is how I take every trade. So if you have any question, just send it to my DM, right? At RegalPIPS is in my handle on Telegram, or send it to the comment section or my Telegram channel comment section. So I will be replying to every questions. See you guys. Peace out.